So someone goes on a GLP-1, ends up in the hospital. We may be paying at some point soon the Medicare for them to get the drug for free, but then we have the expense, and the company ends up winning both ways, right? Because they'll get drugs while they're in the hospital too. So right now we don't have a great way to do that. Value-based pricing is something that a lot of drug companies and policymakers have talked about. It's almost impossible to do, but it would be netting those things. Like, hey, we're going to lower someone's chance of dying, so that's great, and that's lower cost for the healthcare system. So we should be able to capture some of that, net that against anyone who has a bad side effect. Um, as I just described, you can imagine how difficult that is to do. Does that mean to sell all these GLP-1 companies because, as I said, this is kind of the tip or the beginning of some news flow over the next few years? Absolutely not. I mean, the health benefits of losing weight are still better than having gout. So choose your poison. Health, osteoporosis or a heart attack. I would take the osteoporosis. Just goes to show,
Is
though,
there
that
are
there
there
is.
drugs you can take, David, to kind of mitigate those side effects?
Yeah, so they're like Fosamax is a super old drug. There are osteoporosis drugs, and there are things. So what it's showing is that these drugs are way more complicated and serious than the you see on TV. Oh, great! I'm gonna, Kelly Clarkson lost 40 pounds. I guess I should do that too. Um, take, I don't want to mention stars because they get really upset by that sort of thing. But like if you look at recent Ozzy Osbourne tributes, you might be concerned about weight loss drugs. Um, so yeah, it's a serious. It's these are serious, and what it shows though to me is kind of goes against a little bit of what I've been saying for the last 2 years, which is that the best drug is already approved. The next drugs are going to have a really high bar, and that is true from an efficacy standpoint. It's not true from a side effect standpoint. So if someone can show that, well, we have less bone loss, or we have less gout. Well, but similar weight loss, what doctor wouldn't prescribe that? The problem is that osteoporosis type studies as a side effect for no drug company is going to do that, because if you do have a bad side effect, no one's going to do that. No drug company will do that study, because if you have a bad side effect
Right.
and that comes out, that hurts you. So
Of
it
course.
takes it takes physicians and scientists to do this after they're approved, looking at metadata. So I thought it was the most interesting thing that's come out in the last 24 hours. The other thing
And is
on
it affecting the whole group, David, or is it? I mean, have they identified one or two bad apples, and or how does that work?
No, what's interesting is Novo has been up a little bit the last couple days. I think that's more of a bounce on the value, and hey, it was oversold, than it is that, oh, they don't have a problem. Right now it's sort of the group, the GLP-1s. Um, will they be able over time, as more patients get into the database, to say, oh, this drug is worse than that drug? Maybe. But now, how does this actually play out with doctors? This is what happens. Bob goes in because he gained 40 pounds, and he's not a candidate right now, but I'll use Bob since he's here. Bob goes in, he gained 40 pounds, he's super depressed, and he's obese at this point. And they say, okay, well, you're kind of a younger guy. I'm not worried about you for osteoporosis. You do a lot of like exercise. Or maybe they say the opposite. Maybe they say, well, look, you're of the age that you should worry about osteoporosis. But they're going to start to diagnose it, um, like maybe per the patient more directly. So they're going to start to look at older patients, but I don't know if
Right.
that's really the biggest group to worry about. So yeah, it's super interesting of how it will play out and what doctors will do. I don't think though that any doctor is going to be like, "Hey, you shouldn't have a GLP-1." They might, I mean, they might say, "Let's go to some older drugs like a metformin or something." But I still think that GLP-1s are uh, this data isn't cancer. Cancer would be something different. So that
Right.
that would be a so
Or
some
just
news on.
or just do what the three of us do and go exercise and skip the needles.
Yeah, but for a lot of people, they exercise and their metabolism just adjusts. And I know for the longest time, it's been the idea of it's calories in, calories out. That's the simple thing. Everyone knows that. You're secretly eating. That's what. But what they've found is that some people just adjust. So if they start to do calorie restriction or uh, under eating, their metabolism adjusts very quickly, and they can't lose the weight. So uh, you know, again, I don't think that a doctor seeing a patient who's 40 pounds overweight or who's obese and they're worried about other side effects like diabetes or heart disease, that they're going to say, don't use this because of it. But you don't want gout and you don't want osteoporosis. So
Yep.
uh, I've actually had some news, and it's interesting on a couple different points. So I don't know if you remember a long time ago, we had a guest come on who talked about Royalty Pharma, RPRX. And he said, look, I think it's a great way to play the biotech sector, a great way to own royalties, looks to be really undervalued. RPRX has been on a giant um, run. Let's see what it is. So year to date up 20%. In the 1 year, it's up 38%. And it really was kind of coincided with when he was here. The news that came out on Teva is that Teva signed a deal with Blackstone for the off-balance sheet financing of one of their R&D drugs. And it's a really, really promising drug. Blackstone's going to provide them $400 million, and in return, Blackstone will get some milestone payments and a royalty on the drug if it's approved. Why do drug companies do this? I called it an off-balance sheet financing. That's exactly what it is. It's really an off P&L financing, but they call it off-balance sheet. But I don't know exactly why, but they call it off-balance sheet. So instead of spending R&D dollars themselves, they're going to get paid R&D dollars, and it kind of offsets it all. So they're kind of, some would argue that they're going to over earn and pay for it later. So it's sort of like taking a deferred payment plan on a credit card or on a pay to buy, like television or something. You're going to
Yeah.
pay for it.
Buy
But you're
now,
going to
pay
pay for it
later.
more.
Yep.
Yeah, you're going to pay later more, but it makes you look a lot better, and also the risk is more on this other company. All right, so it works out. I mean, it's cost shifting. I know oil and gas companies sometimes do those types of arrangements, and the market did not care. The reason I brought up Royalty Pharma is this is the first time I've seen Blackstone do this, and I haven't researched it to see if that's like no, it's a giant business for them, but they're getting into Royalty Pharma's business, and in that business, there's no added expertise. Like Royalty Pharma doesn't add, in my opinion, a tremendous amount of expertise to the company that they're partnering with. Their money is just as good as Blackstone's money. So it was an interesting development.